Hey, folks, welcome back to another episode of the Agency Freedom Podcast. We help you achieve freedom and success in every aspect of your business. In this episode, we're going to build on what we talked about last week about breaking into commercial, and I'm going to give you guys a complete, exhaustive rundown of how RISKWELL has come to be one of the market leaders for real estate insurance across the country, in the states that we operate in, more than 30 states at this point. I don't know what the exact number is. My wife handles the regulatory and licensing side of things. It bears repeating. I know we've talked about some of the thoughts that I have on how to determine the right niche for your agency, right niches, I should say, because I think the perfect number is between 3 and 5. For RISKWELL, it's 5. It might be 3 for you. Anything less than 3, I think you're vulnerable to market changes. Anything more than 5, and unless you have a large team where individual producers on your team have a small number of specializations, and as a whole, you have a lot more than 5 because you have individual champions for different industries. I think for most offices, 3 to 5 is going to be the perfect number. So after we have this brief conversation on selecting the right niche, I'm going to show you exactly what we did to break into the real estate world. It started here locally in DFW, and then over the course of a couple of years expanded organically as we gained clients and channel partners in other markets, and then we're able to penetrate those other markets as well over time. So first off, we'll talk about exactly how you should be picking a niche. There's 3 components that need to be met, 3 checkboxes, if you will, for picking a niche for yourself and for your agency. The first of those 3 is that you have some kind of understanding, some knowledge of this industry vertical. It might be something that your spouse or family member does for a career, something you did for a career before you got into insurance. Maybe it's a hobby, maybe it's something that you have been interested in for years and years, or you simply have an adjacent perspective to the industry based on friends or some other kind of awareness. If you're going to pick something to be a specialty, a niche for your agency, you need to be able to understand the industry, the vertical. You need to be able to get inside the brain of the decision makers, the channel partners, the business owners and executives in that industry, because speaking their language and creating relevant content, establishing yourself as a thought leader when it comes to risk and insurance planning for that industry, you're going to have a much, much easier time if you are already bringing some level of understanding to the beginning of the conversation. So whether it's a previous job or someone in your life is working in that industry, or it's just a hobby and interest that you have, you need to be able to be excited about talking about it, because your enthusiasm, your excitement when you're engaging with stakeholders from that industry are going to be obvious. It's going to stand out, because most of the time, our competition out there in the insurance ecosystem simply lacks enthusiasm about the client and the industry. If they have any enthusiasm at all, which is questionable, more times than not, their only enthusiasm is towards selling a policy and info dumping on the prospect and making sure that they sound smart to themselves and that they feel like the insured thinks they're smart, as if that is enough to get the job done. So that's the first. You got to have some kind of credibility, some kind of understanding. The second is, where is the business going to come from? Is there enough business in the industry that you have set with the parameters that you have set about the profile of prospect that you're going after? That might be a revenue band, it might be head count of employees, it might be number of power units for commercial auto, whatever the filters are that you're putting around the prospect profile to build out this niche, this specialization. Do you have enough prospects to make it worth your while? On the other side of that coin is, do you have entirely too many prospects? Are you not putting enough filters in place to make sure that anyone who ends up in your pipeline deserves to be there? Because an ideal number for your pipeline is going to depend on exactly what you're doing with these people from a marketing perspective. Are you doing in-person marketing drops? Are you doing cold email? Are you doing cold video drops? Are you doing LinkedIn messaging campaign? Are you doing a phone blast? where you're individually calling people? Is it ringless voicemail? Depending on what your marketing tactics are is going to dictate the ideal number of prospects. And for me, it's in the high hundreds, low thousands is probably what I would say if you're doing something that involves, phone and whatnot. If you're in person, obviously your geographic territory is going to be substantially smaller, so it might be a lot less than that. It could be less than 100. It could be less than 50 if you're doing in-person marketing drops. If you're doing something regarding your local market, whether it's Chamber of Commerce or a networking event of some kind, a trade show, etc., it could very easily be a much smaller number if you're doing something that is a high effort in an in-person sort of fashion. So you got to make sure that the pipeline that you're building is an appropriate size, not too big and not too small. Let's go for the Goldilocks pipeline and make sure that you are thinking about that when you're building out the niche. And third, and possibly most importantly, is not where is the business going to come from, it's where is the revenue, where's the profit going to come from. It has to be a line of business that generates enough profit for it to be worthwhile. Otherwise, even after you win a number of people from this prospect profile, this niche that you're working on, you're not going to have sufficient revenue and profit to show for it to make all of that effort worthwhile. So where does the revenue come from? Let's think about this for just a second. What is the main driver of premium on an account? Well, there's really four areas, four aspects of, and we'll count five and separate it out a little bit. There's five aspects of an account that drive premium. The first and most obvious is the building. Is there building coverage needed? Does this prospect profile typically own their building? If they typically lease their building, then there's a lot less revenue even going into the beginning of the conversation because you know ahead of time that one of the main premium drivers simply isn't going to be present. Next is a team member. Do they have sufficient revenue, sufficient work comp premium, I should say, that is based on payroll? If they don't have a head count, if they don't have a class of labor that drives work comp premium, well, you're missing an opportunity. The third is vehicles. Commercial auto is really expensive right now in most states across the country. If the prospect profile is unlikely to have any vehicles, or if they do, they only have one or two, take that into consideration when you're building out the profile, the prospect, the niche specialization. The third is tools and equipment. Do they have an inland marine exposure? Do they have a need for tools and equipment coverage? Is there inventory? Is there anything that they need from a tools and equipment or an inland marine exposure? If not, then we're missing a big opportunity for premium and thus revenue and profit. And finally, in our list of five is, do they have a substantial exposure to some sort of professional liability need? Is their business built on advice? Is it built on intellectual property and conceptual resources that they deploy to their stakeholders? If there's not an obvious need for you to sell them professional liability insurance, we're missing a big opportunity there. So thinking about your niche specialization is really going to come down to those five factors when it comes to, do we have enough revenue and profit in the vertical, in the niche that I want to focus on? Because if they don't have building, if they don't have team members, if they don't have vehicle, if they don't have tools and equipment, if they don't have a E&O or professional liability exposure, where's the revenue going to come from? Then we're really mainly leaning on the general liability, the umbrella, the commercial or excess liability, and then management lines. And management lines and cyber are going to be very transient. Some industries don't have that much exposure to cyber. Some industries do. Cyber is becoming a lot more expensive than it used to be because carriers are starting to recognize that there's a lot of exposure there. It used to be wildly underpriced towards what the actual need was for premium, but carriers are getting a lot smarter there. So if we're going to add number 6 and number 7, we would obviously have it be cyber exposure and then management lines exposure. Management lines is a simple lumping together, I should say, of 4 different categories. It's going to be directors and officers, employment practices liability insurance, and then crime, and then fiduciary liability if there is a benefits plan involved somewhere. I call those 4 together management lines. And that's really it as far as a identification of where the premium, where the revenue is going to come from. If you're not finding a lot of those things, I would say at least 3 of those 5, 3 of those 7, if you count cyber and management lines, it's probably not a good specialization. So shifting focus now into our history with the real estate investor world and how we've come to be a recognized leader in that space as far as insurance goes. It first started off, as I've talked about a few times in the podcast, with a large client who had 9 rentals and made it clear that they liked the way that we did business, and we found out that we really like real estate investors. From that individual back in 2019, that was back when I was a farmer's agent. It was 2017, so when that first client came to us. From there, we got invites to networking groups. We got invites to Facebook groups. We started getting referrals to the lenders in that space. In the real estate investor world, private lenders, property managers, they lead a lot of the opportunities. A lot of realtors don't like working with investors because they are much more price driven. They're typically buying lower valued properties. It takes a special kind of residential realtor to want to work with a real estate investor, because a lot of realtors aren't trained on how to work with investors, because owner-occupied property, from a real estate agent perspective, is completely different than investor property. So the way that things came about for us, we really started focusing on the live events. This was pre-COVID when we started doing these things, and the live events were a great place to spend sponsor dollars, to get a table, and to simply connect with people on a human level and start to understand what makes them tick, what are the problems that they face, what are the things that annoy them about insurance, and then starting to create content. I started really jumping into video content in the winter of 2019, about a year before COVID hit, and realizing how powerful it was to have transformational conversations on video, to be transparent and vulnerable with, hey, this is what we're seeing in the marketplace. These are the conversations that we're having. These are the challenges that real estate investors have shared with us. This is what RISKWELL does to help with those issues. And creating content that is built around the client. And then just being very intentional about being in the rooms where things happen. Wherever large amounts of real estate investors gather, I want to be there. Whether it is a networking event, whether it's a conference or a trade show, whether it is a webinar. There's lots of paid groups out there that teach people how to be real estate investors, and I can't count the number of webinars and teaching opportunities that I've done with these kind of groups in the last 5 or 6 years. All of this comes back to being a thought leader and being very intentional about building your own professional understanding, your own value as a consultative professional. Because if you're not going to go deep in a market segment, if you're not willing to put in the effort to really understand these folks, understand what makes them tick, understand their buying process, understand how they like to build relationships, then you're not really going to be able to penetrate that market. Because with real estate in particular, it is extremely relationship driven. I can't count the number of times someone's filled out a form on our website and simply said, hey, so-and-so said I should call you. I hear you guys are great. And they're basically already sold before we even put a quote in front of them. Now, part of learning the real estate world is realizing how impatient and flaky most real estate investors are. They're moving way too fast for their own good. And from an operational standpoint, you've got to have your ducks in a row if you want to be able to be efficient and profitable with real estate investors, because they care about speed and efficiency more than anything. A lot of them are price sensitive up front, but once they understand what they're getting by not having that stripped down garbage policy sold by an agent who doesn't really know what they're doing when it comes to real estate investors, then they typically are much more willing to spend a little bit extra to get more value. Because the simple fact of the matter is, from a competitive standpoint, most agents think that they know how to write real estate investors because they think it's as simple as just writing a landlord policy or a simple little dwelling fire policy. But there's a lot more that goes into it than that. If you're not able to read policy forms and know where the language is problematic, know where vagueness is not a good thing. To know what exclusions are going to be really challenging, and to understand the claims process, because for every asset class out there, whether it's 1 to 4 unit residential or small multifamily, medium, large multifamily, whether it's mixed occupancy with commercial ground floor and habitational or residential occupancy on the second and higher floors, whether it's alternative asset classes like storage buildings, self-storage units, climate-controlled self-storage, your strip centers, your shopping malls, your low-rise and medium-rise and high-rise office buildings, anything that has a different asset class is going to have nuance and going to have different quirks you have to be aware of. You got to be able to dissect a policy very quickly and know if it's written correctly. You got to understand class codes. You've got to understand exactly what is happening in a policy beyond just premium and coverage limits, because there's a lot that goes into writing a real estate insurance program to where it's optimized for the actual operations. What tenant classes are going to be in there if it is commercial occupancy? Because a lot of carriers have very particular expectations from a tenant standpoint, and they will not write an LRO, lessor's risk only policy, if the tenants in that building are not BOP eligible for that carrier. Liberty Mutual, Travelers, AmTrust, Hanover, Chubb, and the Hartford are our direct contracts right now. Of those groups, the only one that is even a little bit enthusiastic about writing LRO is going to be Liberty Mutual, depending on the geography, and then Travelers and the Hartford are as well, but if the tenant classes are correct. So I say all this to say, if you're going to get into real estate, if you're trying to break into real estate as a niche specialization, you really have to be ready to put the work in, because it is not nearly as straightforward as most agents think it is. And I love it from a competitive standpoint, because there's a lot of folks out there that come from franchise organizations that don't really do a great job of anything beyond the most basic training. Goosehead and Brightway and TWFG and some other organizations are very high volume with the people that they bring in. But those kind of organizations don't really do anything from a niche specialization. They don't have any kind of specific training beyond the basics of how to do insurance. And whether you're part of an organization like that or you're independent, part of another aggregator like SIAA or Keystone or whatever, taking advantage of advanced training opportunities is going to be critical, because if you don't know what you're talking about when it comes to the nuts and bolts of the insurance, then you're going to be leaning on other people to make sure to cover your bases. And you're going to be leaning on the claims process and hoping and praying that certain things don't happen. And I don't know about you, but hope and pray makes me really uncomfortable. That's why I have spent so much time and energy over the years getting my own knowledge base substantially higher than the average insurance agent, because I don't want my destiny, my client's destiny, to be left up to someone else. I don't want to ever be in a situation where there's an oopsie and I find out after the fact that that's something that I could have and should have known and didn't, because I was just unaware of it. Ignorance does not equate to innocence, unfortunately. And if you don't know what you're doing, you can very easily walk yourself into an E&O claim, walk your client into a bad situation where their only option is to have a claim denied, and then they have to sue you and go after your E&O insurance because you didn't take the time to get familiar with an industry before you decided to jump in. So that's it for now. We ran out of time here. This is something we could go on for a lot more detail on. If you want to hear more about this, please feel free to drop me a line at podcast@jamesjenkins.com, and we can have a conversation there. Real estate has become a huge driver of our success. If you ask most people on the street what RISKWELL is really good at, real estate insurance and real estate investor operations is probably going to be the first thing that most people talk about. That is it for this episode. Ladies and gentlemen, make it a great day. We'll talk to you again real soon. Y'all take care.